Many financial advisors encourage investing into paper assets. Take a look at the stock market and you will see the reality. You came here for the truth, so let me unveil that for you. This chart right here should explain to you exactly what is happening with the S&P 500, and that is a very good example of the stock market as a whole. Monthly highs in the S&P 500 greater than 2100. Many instances we have seen individuals claiming, look, the stock market is going to go over 2000, 2100. Now, if you take this as the perfect example, there have been many instances where this has occurred in the recent past. So they can be right over and over again, yet it will come crashing down over and over again. I've noted specifically that the Federal Reserve's balance sheet has been directly correlated with the S&P 500 for the past several years, all because it is in fact the reason why the stock market is where it is. They have stopped QE3, and as a result, the stock market has been trading within a range. This chart right here is the only explanation you need to determine where the stock market is heading. So let's take a look at the next one here. As you see, the 10-year CDS. So CDS basically tracks this credit default swap, and we've seen this historically. And essentially what this is the default risk. And when you look at default risk, the higher it is, the more dangerous that is. So when you see a country like Venezuela, for example, you'd see extreme volatility. This happens to be out of the US. So take a look at it as you see these different events that have happened in the political realm. Rubio dropping out, Ryan ruled out, Cruz drops out, and everything that's been going on. And you can see that it does, in fact, go up every single time. So whenever you have instability, look for something like the credit default swap to increase. Now you can use the credit default swaps if you're inside of the financial system in order to break that country down. We saw that with Greece, and I assure you this is not over yet. So take a look at this next article right here out of CNBC. Venezuela's gold reserves have plunged to their lowest level on record after it sold 1.7 billion of the precious metal in the first quarter of the year to repay its debt. So they will be selling, in fact, all of their gold if there is a buyer. And this goes to show you how desperate this country is. They will have no real assets left. So they're going to sell off their gold, and next they're going to have to sell off their oil. So look for that in the near future. So essentially what we have here is a situation that all countries find themselves in one which way or another. And what we need to pay attention close to is the actions of the Federal Reserve. Ultimately, that is most important. If they do increase interest rates, we know that the market will react negatively to that, and we also need to pay attention, in fact, to all central banks and their actions. If they go into the negative interest rate territory, we know that the situation is getting worse. If they begin to increase the interest rates, we know, in fact, that they are worried about true inflationary pressures. I believe that we will have a real deflation first and then encounter a hyperinflation or a high level of inflation, which will destroy currencies worldwide. If you found this video informative, please give me a thumbs up. Last but not least, I want you to check out themoneygps.com, where I have all kinds of free stuff for you. I have tons of free ebooks and e-course and everything else. So please check that out, themoneygps.com. Take care.